Hey, welcome back to the dive. Ethereum, digital gold and silver, squid token, regulations on stablecoins, NFT exposures, Bitcoin mining, and company key milestones that investors should be watching out for are the topics that our guest will deep dive into today. He is the president and COO of HIVE Blockchain Technologies. Aydin Kilic joining us today. But before we bring Aydin on, just a quick reminder to tap that subscribe button for me, please. Hey, Aydin, welcome to the dive.
Hi, thanks for having me.
Hi, thanks for coming. All right, so Aydin, Ethereum has hit all-time highs this week. What do you think is driving the price, and do you think it's sustainable?
Yeah, I think it's sustainable. What's driving the price is a few things. So first of all, we're just in a bullish market. I think that at the political or governmental level, we're seeing more adoption and more regulation of cryptocurrencies, which is a good thing because regulation implies that it's being accepted. And but more specific to Ethereum, there's a strong developer community behind it. It's very versatile. We all know about the smart contracts, and so I think that there's just more and more use cases emerging for Ethereum. Obviously the huge NFT boom right now. People are minting their NFT projects on the Ethereum blockchain, which remains as the blockchain of choice. There's also Solana, but really Ethereum's the gold standard if you do want to mint a new NFT project. And then of course all the DeFi and all the other tokens that operate on that blockchain. And if that's not enough reasons, there's also the talk of staking. And so I think that people are consuming supply, and they're trying to HODL Ethereum as much as possible as they look forward and ponder when staking may occur. So that's sort of all added up to a really great week and a strong week for Ethereum that I think is going to continue to be sustainable.
Awesome news. All right, so a recent analogy we heard is that Ethereum is turning into digital cash while Bitcoin is turning into digital gold. How do you view the two use cases for the two coins?
I think that Bitcoin and digital gold have always been, that's been a classic comparison. I think that Bitcoin as a store of value is, you look at what MicroStrategy is doing, it helps increase their balance sheet. And, a lot of the mining companies that are hodling Bitcoin, they just want exposure to this asset class. I think all of these companies that are raising institutional capital are trying to acquire Bitcoin in clever ways. In mining, if you've got economies of efficiency, you can acquire it cheaper than if you just bought it in the spot market, and others are just buying it in the spot market using whatever technical analysis they may have. So the point is that I think that they're acquiring it and they're hodling it because it's like a digital gold. And there's obviously the advent of all this inflation and monetary policy globally. Ethereum is being digital cash. I think again, referring back to my previous comment, it's shown as it's very versatile in terms of the functionality that it can support. Again, DeFi, minting NFT projects, and all these different token ecosystems. So the reality is I could send you, if you said, hey, Aydin, I want $1,000 for, that vase that is in the background you want to sell me. I could send it to you in either Bitcoin or Ethereum in terms of just, transferring, a fungible amount of value to you. So I think that it's more of a philosophical commentary, but I think both are great and robust and time-proven cryptocurrencies.
Okay, great. Some very, very good points there. Okay, so this week we saw a crypto token called the Squid Game token go from a multi-billion-dollar market cap to zero. Do you think these stories will always be part of the crypto universe? And what does the crypto community need to do to avoid falling victim to these types of pump and dumps?
I, for one, was completely surprised that it went to zero. The Squid Game token, how could that not be the next resilient, developer-centric utility token that would have years and years and years of practical use. Oh, wait a second. And so the thing is, it's like people know, they know, and they're speculating. So what do I say to all the people out there? You know what you're doing. Don't go buy a junk token and then get sad when it goes to zero. To my earlier point, and I think you framed it beautifully with the two previous questions, Bitcoin and Ethereum, right? Frank likes to call Bitcoin digital gold and even Bitcoin silver sometimes. Bitcoin gold and Ethereum silver. These are robust blockchains and cryptocurrencies that have, vast and very committed developer communities that are constantly improving it. And they've stood the test of time, and they're widely adopted. So I think people need to stop buying junk tokens and start buying Bitcoin and Ethereum. That's it. That's because if the message gets too convoluted, people are going to forget what I say. I'm going to say it again: buy Bitcoin and Ethereum. Stop buying junk tokens.
Yeah. They need to get with the program. Okay, yeah. So moving on here. A U.S. Treasury Department-led regulatory body has suggested that it may be time to start talking about regulating issuers of stablecoins like banks. Do you think this is appropriate?
To my earlier comment, I think that regulation is a precedent of adoption. So I think that because look, the other option is banning it outright, like China's done it. So I think that the more that the U.S. strives to wrap their hands around the cryptocurrency ecosystems and regulate them, the better, because then it allows more pathways for institutional capital to flow into the space, more professional service providers that can, whether they be audit firms or law firms or what have you, and so it actually integrates it into the broader business ecosphere throughout the United States. So yeah, I think it's a good thing. And some people hum and haw about paying tax. It's like you'd be focused on building value, and tax is just a secondary consequence, right? So I think regulation is good.
Okay, awesome. Moving on here. So last week, Hive announced a $450,000 investment in Network Entertainment Inc. to gain exposure to the NFT business. Could you give us some color on why you chose to make this investment?
Yeah, well, the Network Group, they, first of all, as a publicly traded company, they had a great value proposition. I spoke to one of their VP of Corp Dev, or the VP of Corp Dev, I should say, and they just had they were undervalued as a stock just in first principles. They produced some remarkable content, high quality video content. And so they also had incubated a remarkable idea where they were going to be integrating some NFT technology into their, so people could kind of digitally own some of the new projects that they were making. And it was a very strong team. And so it just made a lot of sense. And so it was, from first principles, a company that had a great financial basis and were undervalued as a publicly traded company, and having come to the table with a very novel but actually practical and meaningful way to integrate NFT technology into their primary offering, which is top quality video productions.
Okay, makes sense. Okay, so let's talk about the most recent Bitcoin miners purchases you made. How has the mining equipment changed over the last few years, and where do you think it's heading?
Oh, that's a good question. It's always changing. So what's happening is you're getting advancements from all of the manufacturers. Bitmain, MicroBT, Canaan are the big ones that everybody knows about. And so the primary metric that one looks for when they're acquiring Bitcoin miners is the joule per terahash. So how much energy is expended for every hash that's performed. And a hash is an attempt to solve the cryptographic hash function. So, pardon me, the more hashes you generate, the more rewards you get, very simply put. And so you want to generate as many hashes as possible. That's your revenue side. And then on your cost side, well, your cost side is the energy, right? So the lower energy you consume per hash, the more efficient the miner is. So you see the hash rates going higher and higher. So, back in 2017, we were using 13 terahash S9, right? The model is S9 at 13 terahash is the output. Now, you've got the Bitmain S19, it's the latest one, and it's got 110 terahash, right? So, 9 times as much hash rate as a machine that was coming out 4 years ago. However, here's the thing. It's not just 9 times as big, right? Because then you could just buy 9 times as many machines. It actually is about 3 times more efficient. So before, an S9 was about 100 joules a terahash, very roughly. Now these newer generation machines are 30, 35 joules a terahash, right? So they consume 1/3 of the energy, number one. Number two, the form factor, given a box of this size, like, kind of the size of a toaster, a big toaster, it's producing about 9 times as much hash rate, right? And so this is a function of, chip development, at the foundry level. TSMC is kind of the global leader. And so they're optimizing their nanometer processes, which means they're printing, digital logic circuits on silicon wafers at the nanometer level. Before it was, 12 nanometer, then 7 nanometer. And so as it gets smaller, right, then you could fit more circuits on the ASIC silicon chip.
Okay.
And so you can get more processing power per chip. And provided that the chips are thermally efficient, then you don't waste more energy doing that. And so then what's the result is you get more overall output with on a per hash basis, lower energy consumption. The thing is, the beautiful thing, I'll try to summarize a sentiment like this. Like, crypto mining is an exercise in unit conversion. You're taking energy and you're converting it into hash rate. And then there's math equations that tell you exactly how much Bitcoin or Ethereum you will get for that given hash rate. So all you're doing is you could take a step back and be like, okay, on my cost side, I'm consuming energy. That's my raw resource. And on my, revenue side is my cryptocurrency. And so the specifications of these machines tell you how much crypto you'll make. Well, they'll tell you how much hash rate you'll make, given how much energy. And then when you go, well, how much crypto am I going to make given that hash rate? There's all these online calculators that you could use, and because that fluctuates with time. So
Okay. Great. Awesome. Thank you for that. All right. So one more thing before we let you go here. Are there any milestones Hive investors should be watching out for over the remainder of Q4?
At Hive, yeah, I think that investors should have their eyes glued on this story. I mean, we've been, expanding at a breakneck pace. The team is working around the clock globally. I had to put my phone on silent. I apologize because it just doesn't stop. But we've got amazing synergy. We've got a truly globalized team. Amazing leadership with Frank Holmes, and one of the most respected brands in the space, first publicly traded crypto miner, all green and clean energy, which is becoming an increasingly important mandate. I was on a panel last week that PayPal hosted, and it was a crypto climate change accord panel because all the institutional capital is trying to understand this asset class, but because ESG is such an important mandate right now for investing. Hive is an ESG conscious and ESG friendly crypto miner, right? So I mentioned earlier in this interview that crypto mining is about economies of efficiency. So Hive has very efficient data centers. Our latest data center in New Brunswick, which is going to be at 70 megawatts in Q1 of next year. It's passive design, very, very unique. A lot of a lot of engineering and unique architecture. And so it's just this sort of design intelligence that we're incorporating because we've got a lot of intellectual capital. The company's grown. The team from GPU1 that joined earlier this year, we've got an amazing team in Sweden and a software development team in Croatia as well. So I obviously can't say too much about upcoming press releases, but definitely, I mean, Frank does an amazing job of, I think, telling the story. And so, yeah, just, keep an eye out for our press releases, as we definitely have some exciting growth ahead.
Awesome. Very exciting. We definitely will over here at the Dive. Well, thank you so much for joining us and sharing your story with us.
Okay, cool. Thanks.
Thanks so much for tuning in. We'll be back again tomorrow, so be sure to turn that notification bell on.